Every economics textbook you've ever read has just become scrap paper. Think about it. Conventional wisdom says when interest rates hit the ceiling, gold is supposed to crash. But right now, in 2026, as rates sit at historic highs, gold isn't falling, it's skyrocketing toward the $5,000 mark. It's a total breakdown of the financial laws we've trusted for decades. Why is the impossible happening right before our eyes? There is a brutal truth being hidden behind these numbers, and you need to see it. To understand this madness, we first need to look at the unbreakable law that has governed the markets for the last 50 years. For decades, gold and interest rates moved on opposite ends of a seesaw. It was simple. When the Federal Reserve raised interest rates, gold would tank. Why? Because gold doesn't pay a dividend or interest. If you can get a 5% or 6% return just by holding risk-free government bonds, why bother holding a heavy bar of yellow metal that just sits in a vault? This wasn't just a theory, it was a mathematical certainty for investors. But look at the screen right now. Since 2024, the Fed has pushed rates to levels we haven't seen in a generation. According to all the academic models, gold should be struggling to stay above $1,800. Instead, it has ignored the Fed entirely. It didn't just stay steady, it broke through $3,000, then $4,000, and is now knocking on the door of $5,000. This is what we call the death of the old rule. The academic logic is collapsing when the most powerful central bank in the world tightens the screws on the economy, and the safe asset of choice, gold, continues to rally. It tells us that the market no longer cares about the Fed's interest rate game. Think about that for a second. If the old seesaw is broken, it means the fundamental drivers of our wealth are shifting. We are no longer in a market driven by opportunity cost. We are now in a market driven by something far more primal. The question you should be asking isn't, why is gold so expensive? But what does the market know that we don't? The data is clear. Despite the cost of borrowing, investors are choosing the zero yield of gold over the high yield of the dollar. This disconnect is a massive red flag. It's a brain teaser that has left traditional Wall Street analysts scrambling for excuses. But the answer isn't found in a textbook. To find the real culprit, we have to look at a number so large it's almost hard to comprehend. Because while everyone was watching the Fed's interest rate hikes, a much bigger bomb was ticking in the background. A $35 trillion debt bomb that is finally starting to leak. But high interest rates are not the whole story. There is another number, far more terrifying, that has been silently fueling gold's ascent. The $35 trillion U.S. national debt. According to the latest data from the U.S. Department of the Treasury, we aren't just looking at a deficit anymore. We're looking at a debt spiral. For years, the U.S. government could print money and borrow at almost zero cost. But now, with interest rates at these levels, the cost to just service that debt, just to pay the interest, is eclipsing the entire defense budget. This brings us to a concept you must understand if you want to protect your wealth. Real yields. In a normal world, when the government pays you 5% on a bond and inflation is 2%, you make a real profit of 3%. That makes bonds attractive, and gold foreign. But in 2026, the math has turned toxic. Investors are looking at that $35 trillion mountain and asking one simple question: how will they ever pay this back? There are only two ways out. They either default, which is unthinkable, or they inflate the currency away. In other words, they print so much money that the debt becomes cheaper to pay back, but the dollars in your pocket become worthless. When people realize that the safe 5% return on a government bond is being paid back in monopoly money, they stop looking at bonds as a safe haven. Trust is the ultimate currency. And right now, trust in the U.S. Treasury is evaporating. This is why gold is behaving so strangely. It's no longer competing with interest rates. It's competing with the survival of the financial system itself. Every time the debt clock ticks up another $1 million, another group of investors decides that physical gold is the only lifeboat left. It's a classic case of loss aversion global scale. People aren't buying gold because they want to get rich quick. They are buying it because they are terrified of becoming poor overnight. They see the writing on the wall. They see that the math of the U.S. Treasury simply doesn't add up anymore. When you lose faith in the borrower, even if that borrower is the most powerful government on earth, the interest rate they offer you doesn't matter. You just want your capital back in a form that cannot be devalued by a printing press. But here's the real twist. It's not just individual investors like you and me who are scared. The world's biggest, most sophisticated financial players are making their move. And they aren't just buying gold, they are orchestrating a massive great migration of capital and shifting the entire global balance of power. If you think this is just a panic move by retail investors, think again. What we're witnessing is a great migration of capital orchestrated by the most sophisticated financial players on the planet. This isn't dumb money chasing a trend. This is smart money.
Yeah, we can't get enough. We stay all day, all night, living in paradise. Remember, you don't get it twice. The time of your life.
Years, gold ETFs, the paper version of gold, were bleeding cash. But in 2026, the tide has turned violently. Net inflows are hitting record highs. Why? Because institutional investors have realized that in a world of $35 trillion in debts, a digital entry in a bank's ledger isn't enough. They want the real thing. But the biggest movers aren't the hedge funds, they're the central banks. We're seeing a historic level of gold accumulation led by the BRICS nations. These aren't just purchases, they are strategic withdrawals from the U.S. dollar system. For decades, central banks held U.S. treasuries as their primary reserve. Today, they are swapping those paper promises for physical bars of gold. Why would they do this? Because they've seen the weaponization of the dollar. They've seen how quickly digital assets can be frozen or devalued. In their eyes, gold is the only asset that carries no counterparty risk. It is nobody's else's liability. It doesn't require the government's promise to be valuable. It simply is valuable. This is the return of real money. For over half a century, we've lived in an era of paper gold and fiat faith. Giants have signaled that this era is ending. When the people who print the money start trading their own currency for gold, you know the game has changed. They are building a gold floor under the global economy, ensuring that when the debt laden sea eventually collapses, they are holding something with intrinsic, unhackable value. This isn't just about diversification anymore, it's about sovereignty. The smart money has stopped asking, how much profit can I make in dollars, and started asking, how much gold do I need to survive the dollar's decline? They are moving towards a system where gold isn't just a commodity you trade, it's the foundation upon which the new financial architecture will be built. And as these giants move, they are leaving a trail of clues that point towards a radical transformation of how the world conducts business. Because while the West is focused on interest rates and inflation targets, the new power block is preparing a scenario that can change the definition of wealth forever. They aren't just waiting for the system to break, they are actively preparing for what comes next. While the West is fixated on minor interest rate adjustments and monthly inflation targets, a much larger transformation is taking place across the rest of the world. This isn't just about the price race, it's about the preparation for the time of your life. Welcome to the era of the BRICS Plus expansion. In 2026, de-dollarization is no longer a fringe theory discussed in dark corners of the internet. It is the official policy of the world's fastest growing economies. From China and India to the newly joined energy giants in the Middle East, a common realization has set in. Depending on a single currency backed by $35 trillion in debt is a survival risk they can no longer afford to take. We are seeing the early stages of a gold-backed settlement system. Gold is being pulled from the sidelines and placed directly into the center of international trade.
like it lasts to the break of
Because
day.
gold is
No
the
matter
only
what people
neutral
say,
asset that
live life in the
everyone trusts.
fast
When two
lane.
countries
Double shot
want
for the
to trade,
gifted,
but don't want to
triple shot
use
for
the
the pay.
dollar,
There you go, drink it up, all this love in a cup. Yeah, we go slow, we go fast. Yeah, we can't get enough. We stay all day, all night, living in paradise. Remember, you don't get it twice. The time of your life.
You hold gold to ensure your economy can breathe if the global dollar clearing system
This is the
shuts
time
down.
of your
If you are an
life.
individual, you hold gold for the exact same
Remember,
reason.
you don't
We are
get it
witnessing a
twice.
transition
The time
from a
of
world
your
of
life.
paper wealth to a world of tangible security. The record-breaking volatility we see today is simply the friction caused by these two tectonic plates rubbing
Remember,
against each
you
other.
don't get it
On one
twice.
side,
The
you have
time
the
of
old
your
order
life.
trying to maintain control through debt and interest rate hikes. On the other, you have an emerging bloc building a system where value is anchored to something physical, something permanent. This means that the $4,900 or $5,000 price tag isn't just a high to be sold for a profit. For these global players, it is the new floor. They are repricing the world's most important asset to reflect the reality that the old system is exhausted. As they settle trades in gold and back their new digital currencies with physical reserves,
Hey there, what you
the demand
drinking?
becomes
2 shots, let's
structural,
pour
not
it
just
up.
speculative.
I know what you're thinking.
We are moving away
but
from
tomorrow
a
won't come
decade
for
where
us.
wealth was
This
measured
life
by
that we're
how many
living
digital zeros
ain't never
you
gonna
had in
give
the bank
it up.
account,
Double
into
shot
a
for the
decade where
gifted.
wealth is measured
One more
by
for
what you
us.
actually
There you
own.
go, drink it up. All this love in a cup. Yeah, we go slow, we go fast. Yeah, we can't get enough. We stay all day, all night, living in paradise. Remember, you don't get it twice. The time of your
The
life.
entire world is repricing itself. Where does that leave you? Does a $5,000
This is the
gold
time of
price
your
mean you won?
life.
Or does it mean the currency you use every day?
Remember,
is
you don't get it twice.
As
The
we
time
look
of
toward
your life.
2027, the answer to that question will determine the difference between those who thrive in the new order and those who are left holding the paper of the old one. So as we look at gold knocking on the door of $5,000, we have to face a chilling reality. Gold isn't necessarily becoming more expensive. It's the currency in your pocket that is losing
Don't look
its
at the
soul.
past, no, we're
Paradox
not
we've
going that
analyzed
way.
today,
Oh, now
where
make it
gold thrives
last,
despite
make it last to the
record high
break of
interest
day.
rates,
No
is
matter
the
what
ultimate
people say,
distress signal.
live life in the
It is the
fast
market's
lane.
way of
Double shot for the
screaming that the
gifted,
old
triple
financial
shot for the
system,
pay.
built
There
on
you
a
go,
mountain of
drink it up.
$35
All this
trillion
love in a
in
cup.
debt
Yeah,
is
we go slow,
finally
we
reaching
go
its
fast.
breaking point.
Yeah, we can't get enough. We stay all day, all
We are no
night,
longer just
living in
looking at a typical market
paradise.
cycle.
Remember,
We are witnessing
you
a
don't get
structural
it twice.
repricing
The time
global
of your
economy.
life.
When the world's most powerful central banks and the smart money start swapping their
This
paper
is the
for
time
physical
of your
bars, they are
life.
sending a message that fiat faith is no longer enough
Remember,
to
you don't
guarantee
get it
survival.
twice. The
This
time
isn't a
of
reason
your
to
life.
panic, it's a reason to prepare. Knowledge is your first line of defense. Understanding that the transition from paper wealth to tangible security has already
Remember,
begun
you
puts you
don't
ahead
get
of
it twice.
90%
The
of the
time of
population
your
who
life.
are still waiting for the old normal to return. The 2026 wealth gap won't be defined by who has the most digital zeros in their bank account, but by who understands the true nature of value. As we move toward 2027, the stakes couldn't be higher. If the global payment system were to shift tomorrow, what would you actually own? Would you be left holding a digital ghost or a real asset that has survived every empire for 5,000 years? This is the conversation of our generation. Do you believe the $5,000
Hey there,
mark
what
is
you
just a
drinking?
temporary
2
spike,
shots, let's
or is
pour
it the
it
final
up.
warning
I know
that
what
our
you're
current
thinking.
monetary
But tomorrow
experiment
won't
is
come
coming
for
to an
us.
end?
This life
If
that
the
we're
system
living
changes
ain't
tomorrow,
never gonna
are
give
you
it
holding
up.
a number
Double
on a
shot for the
screen
gifted.
or a real asset
One more
in
for
your hand?
us. There you
I
go,
want to hear
drink
your
it up.
perspective.
All this love
Does
in
this
a
shift
cup.
scare
Yeah, we
you,
go slow,
or do you see
we
it
go
as the
fast.
ultimate
Yeah, we can't get
opportunity to
enough.
protect
We
what
stay
you've
all
worked
day,
for?
all night,
Drop your
living
thoughts
in
on the $5,000
paradise.
target and the
Remember,
future
you
of the
don't
dollar
get
in the
it
comments
twice.
below.
The time
Let's
of your
decode
life.
this new era together. Don't forget to like and subscribe for more deep dives into the hidden
This is the
mechanics
time
of
of your
wealth. See
life.
you next analysis.